Hey everybody, welcome back to the Financial Thing. Thursday evening, or wherever you are in the world. Could be morning, could be afternoon. Live stream. Got tons of stuff to get through today, but first, before we start, here every Thursday, usually at 7:30 p.m. UK time, 2:30 p.m. US Eastern time. The stream always is archived on the channel. If you want to watch it back, you're probably watching this in the future. Then I hope you get a lot of value out of it. And please hit the thumbs up right now if you can take care of that. I appreciate that. And subscribe to the channel. Again, we have a ton to talk about today. We're going to be going through some peer-to-peer lending news, some administration stuff, covering a little bit inside the latest Lendi administration report. We're going to be talking about what's going on in the stock market and one of the news stories that somebody on the Facebook group, Darren, posted about so many people in the UK not having barely anything in savings. I think 10 million people with only £100 in savings, and why that is. And, if you're a person watching this video who doesn't have much in their savings account and maybe doesn't invest, we're going to talk about how that can be accomplished. And we'll talk about some Bitcoin, some cryptocurrency news. What the heck is going on with Bitcoin? Why is it so up and down at the moment? A lot of news out there at the moment that's making the price extremely volatile. And we'll look at the Trading 212 portfolio and see how that's doing. Again, I'm going to be donating a portion of the profit made on that portfolio, so hopefully I can continue through September to really increase the gains on that portfolio, so we can give some of that to a charitable cause, which is near and dear to my heart. Haven't quite decided yet who that is going to be, but I do have a good idea. So let's get to it. We'll have a quick hello to everybody on the stream. Paul in Stockport is first. Steve Manton in Solihull near Birmingham. Annabelle Nyron, como estas? Welcome from Alicante in Spain. Peter Vince in Leatherhead, thanks for joining us. Paul Bagworth, as always, is here in Kenilworth. Colin Perry in the Peak District. Alan Lomas in Chesterfield. Dave Dawson in sunny Staffordshire. And Debbie in the Cayman Islands. Stephen Hale in Nottingham. Mike Powell in Southampton. John Morgan in Swindon with a nice glass of Goose Island. I have no idea what that is, but it sounds delectable. Keith Morrison, good old the North in Lincoln. Aki Chap, representing the Bitcoin in Drizzly Accrington. And Brian in Woburn. Stephen Green in Southport. Yes, Mike, we were not here on Thursday. We did have a little bit of a technical issue last Thursday. We made up for it on a Saturday stream, so sometimes these technical things happen. Gail Leach from Bulgaria. Welcome, Gail. Thanks for joining us. Are you on vacation or are you in Bulgaria permanently? That's an interesting place to be. A lot of power lifters out there, I remember, about Bulgaria. Not much else that I know. Maybe they eat pierogies. So again, if you have questions or comments, pop them in the chat. Look at it at the end. Do a little bit of Q&A before the end. We'll hopefully wrap it up in less than an hour. As I always say, we'll have a quick look at the weekly LoanPad Dashboard. As you know, LoanPad, I think, is one of the better places, in my opinion. Again, not financial advice, but you can see they've ticked up one extra loan since Saturday when we looked at this. They were at 92 live loans, at 91, now at 92. Still, most importantly, this liquidity here, estimated time to sell. If you need to exit for some reason today, right at this moment, is less than 1 day, which is a good sign of liquidity on the platform. Average loan to value at 41%. And we have 33 million and a half pounds of loans on the platform at the moment. And just this one loan that seems to be hanging around, one loan which is covered by the provision fund. And it's only a £150,000 loan. So again, LoanPad, slow and steady, wins the race. We're going to look at this a lender vote result that came through from the house crowd that I actually was involved in this development. It was the only investment that I made on the house crowd. And I didn't put a lot in because I had my reservations about the platform, and just thought, I'll have a stab at one of the developments that I thought looked maybe okay. Obviously, it wasn't. They tried to get investors to pony up more cash to finish the development. They're trying to get £8 million from investors. Now, if you don't know, the house crowd is in administration, so I personally voted no. There was no way I was going to provide the house crowd with any more money because they've proven that they haven't been able to do good things with the money that they've been given. Inevitably, I knew this was not going to get funded, and which it didn't. They said they were able to only get 5%, less than 5% of the target being pledged. So what is that, 400 grand out of their 8 million? So now they are saying that they will likely have to agree to accept an offer of 4.7 million pounds, which will result in a return of about 2.25 million. You can see that down here, which will inevitably end up in investors losing money, I think, at this point. So another bit of poo in the peer-to-peer lending administration side of things, but totally not expected. I didn't think they were going to get this £8 million loan funded through investors. I mean, if you've been burned already, you're not going to put your hand back on the stove and go in for some more. So surely they must have known that. So yeah, another piece of news on what's going on there. Here we go. This was interesting. Lendi files a negligence claim against former legal advisors. So Lendi, another company that's in administration, has filed a negligence claim against law firm Clark Wilmot at the High Court. Now they claim that Clark Wilmot helped them decide on loans that were going through their platform, and obviously with a lot of the loans being absolute doo-doo, and the platform collapsing, now Lendi is filing negligence against the law company that apparently assisted them do that. Big question being, how do they have money to fund this specifically lawsuit, unless it's on a retainer basis where collect on success of the lawsuit. But the law firm Clark Wilmot says, we are aware that a claim has been started against us, but it has not been served, so we have no details and we're unable to comment. And it's being handled by Shoesmiths. They are the law firm that is representing Lendi. So interesting piece of news about that. It just seems to be such a mess with Lendi, and it continues on and on and on. We've seen this week that Lendi administration costs passed the £3 million mark, and yeah, this administration through Lendi is just becoming more and more and more and more costly. All the money is getting drained by the way of these fees. So time costs occurred, and this is the report. If you're a Lendi investor, you would have gotten the report. And I was looking through it, and it says time costs incurred since appointment total, and I'll bring this in here for you so you can see, £3.725 million have been generated in time costs and fees, which is never a good thing. And you can, if you really want to go through these numbers, you can. It's pretty uninteresting, but the realizations of what they've been able to recover, according to this report, you can see here the DFL live loan summary, which is development finance loans. They have 117 million pounds of balance in those loans as of the 24th of May 2019, and gross realizations during the first 18 months of administration have been only 24.6 million pounds. And now the gross balance of money that is owed to investors is standing at 83.1 million pounds of 23rd of May. That is of the 23rd of May 2021. So still a lot of recovery work left to do. There's 16 live development finance loans left out there to recover, Again, the fear being that the longer this drags on and on and on, and I think it's going to drag on for at least another 2 years, the amount of money that's going to go to the administrator, number one, is going to be quite excessive. Yeah, so not, again, Lendi's just is what it is. Definitely expect some pretty severe capital losses with regard to that. FutureBricks exits the peer-to-peer lending market. Now, this is interesting because one of the guys from, don't quote me on this, but I think it was Lambe that I used to deal with over there, ended up moving over to FutureBricks, and he had reached out to me to tell me about what the platform was doing. And they made a pretty swift exit from peer-to-peer lending, obviously citing due to regulatory burden. So the FCA is being a lot more difficult when it comes to letting peer-to-peer lending companies into the marketplace now, and very much scrutinizing peer-to-peer lending companies because they don't want any more failures tarnishing the FCA name. So FutureBricks is decided to completely exit peer-to-peer lending on the retail side, and will be introducing new products that will only be aimed at certified, sophisticated investors and high net worth investors. It says they may launch a new and unregulated product. So they will not be under FCA regulation for whatever that is worth nowadays. We're not really sure about that. So that is that. And interestingly, FutureBricks was one of these seeders raised rounds. They raised £481,000 in October of 2020. So I've always been a bit of a naysayer of things like seeder shares. I just think that it's very risky. I mean, sure, you could flip some shares on one of these crowdfunded share markets, maybe. But I tend to stay away from buying shares in these startups. I think it's highly risky, and one of these companies can just close their doors at any given time. And if you are a shareholder through a company like Cedars, chances are you are not going to get your money back because it is not covered by anything. It's like you're making a startup investment in a startup company. So very, very high risk, and we don't know, really what the returns are going to be on any of these types of seeders investments. So if you are looking at that, just be aware of the risks and what you're going to be facing. Another report, young retail investors flock to alternative lending across Europe. This report is saying that 75% of Mintos investors, not Mentos, not the mint, Mintos, are now millennials and younger, with the average age for new signups on the platform is 18 through 25 years old. Now, absolutely not surprising. Young people are into tech. They're into, taking on fintech investments. So, and I think as some of the companies have failed, that people maybe who are in the older age range become a little bit gun shy as to signing up for other types of peer-to-peer lending companies. So absolutely no surprise that they're seeing very, very, very young signups now. And I also think that some people in that age range are just very inexperienced too, and they don't really understand the risks of what they're signing up to. And there's really a lot of lack of education about risk management in the investing world. And I think that ties into the news story of why so few people have necessarily savings. Sometimes that's just economics and people don't save. But a lot of times the people are just not really informed about risk and also how to invest correctly. So there is that story. We got the FCA warning regulated firms against misusing their permissions. Reminds me of the story about Collateral, the peer-to-peer lending company that failed. That a lot of people were sort of led to believe that they were operating under the FCA permissions when they were not, and ended up closing their doors and taking most of the people's money with it. The FCA, again, warning they do not want to be tarnished on the name because they've already had a lot of problems, and they're saying you better not misuse their permissions, because we will shut you down. It's saying that there are 1,450 European Economic Area firms using temporary permissions to access the UK market. And what those companies are doing is trying to get full FCA authorization, but they're in a holding pattern while the FCA looks at those firms and decides whether they're going to give them full permissions or not to operate within the United Kingdom. Rathi has revealed the FCA has taken action against 13 firms restricting their access and restricting their business and removing another 120 firms. So you got to be really, really careful out there now with where you decide to put your money, and even if a company has temporary FCA permissions, that doesn't necessarily make it a safe, quote, safe place to invest your money. You really do need to do research now if you're considering like an alternative investment, peer-to-peer lending, fintech. Even if you're buying cryptocurrency, you got to be very, very careful who you're buying your cryptocurrency through, and we're going to look at a story that's been released about that too. Financial fraud up by 150% during the pandemic. So TransUnion, which is a huge credit agency, has found the number of suspected fraud attempts in financial services has risen 149% annually between January and May this year compared to the same period of 2020. Across all industries such as travel and gaming, the rate of suspected digital fraud attempts globally rose 24% over the same period. And then, very, very interesting, a survey by TransUnion found 1 in 10 banking customers have been protected from losing their money by their bank. This really goes down to some, I hate to say this, but some levels of stupidity on consumers' ends where they're clicking on things that are obviously not legitimate. We've seen this recent story with TSB. Let me pull this up. It was a kind of a misleading article too about TSB banning crypto. Here we go. They're going to be banning. Let me see if I can pull this up. They're going to be banning crypto purchases because of the amount of fraud that they have seen within the industry. Now, that really is that's an annoying thing for me to see, because the way that the news story was written, it was almost like the platforms themselves were the ones being fraudulent, but that really wasn't the case. Let's look at the news story and let me show you what this is. TSB Bank plans to ban cryptocurrency purchases due to increasing fraud numbers. Reportedly, transactions involving Binance, which is the largest cryptocurrency exchange in the world. The cryptocurrency exchange is involved in two-thirds of these fraud reports. A Binance representative denies these claims and said the exchange deals with complaints like these in a very, very serious manner. So they are going to stop cryptocurrency purchases and stating it's because of fraudulent transactions. Now, I go by the more of the conspiracy theory thought that none of these major banks want you buying cryptocurrency, not to protect you at all. It's a great excuse. It's a great excuse to say we want to protect our customers, and also they do have to sometimes step in and pay out those claims when somebody makes a mistake and ends up depositing money into a fraudulent account for some reason. But TSB doesn't want you to invest in cryptocurrency. They want you to keep your money in their bank so they can use your money to lend out, make interest on your money, and pay you absolutely nothing in interest. So you will see a lot of more liberal banks who will embrace the Bitcoin and embrace the cryptocurrency market and allow you to do what you want to do with your money. And you're going to see some of these old school banks really crack down and say, no, we are going to protect our customers. And I find it a little bit ridiculous that you can't protect everybody from everything if people are stupid enough not to do research on where they're sending money to, not to, you got to send your money to the right places. You got to send it to the right platforms and make sure that your deposits are going to the right place. That's my responsibility as a custodian of my own money, right? I could send my money to all kinds of wrong, fraudulent places, not necessarily just cryptocurrency. But I think this really takes away freedom, right? We're talking about freedom here. This is saying you cannot do what you want to do, what you want with your money. If I want to buy some cryptocurrency, no. TSB says you cannot do that because we are going to protect you. And this is just another example of how almost our freedom is being clamped down on, because these big banks do not want us to be investing in decentralized investments like cryptocurrency, because it takes the control away from the banks. Your TSB wants you to walk into their branch and do some investments through them and leave your cash well alone. Not a fan of clamping down like that. I do think protecting people is very important. I do, but why do you not just educate them? Why not send them out, an email saying, hey, this is what you need to watch out for. Let's have some education and show people what is the right and wrong way to do it. And let's warn them against the things that we've seen happen, within TSB as far as fraud. Banning people is just ridiculous. So, big thumbs down on that. But again, this story I thought was interesting about the fraud too, is showing that it's not just in cryptocurrency. Fraud happens all over the financial markets. Money laundering through banks is a huge problem. It's been a problem for probably as long as banks have been around. And we see it in the gaming industry. We see it across the travel industry. This is really not anything to do with cryptocurrency per se. But again, I get a lot of comments and emails about cryptocurrency fraud and how things are so bad. And that's just a good example how it's not just cryptocurrency. Lendingvest has priced a third securitization of buy-to-let mortgages. Lendingvest is just a really solid company right now. They are packaging up their mortgages, securitizing them. That frees up money. It allows capital investment for them to increase their lending. Again, I will keep saying this. I think that the days of you as a retail investor going to invest through Lendingvest are probably going to be numbered, as they're coming up with these securitizations, and they are going to do much bigger deals, probably through institutions. I'm sure that will happen. But Lendingvest, again, securitizing 280 million pounds of prime buy-to-let mortgage loans, which have been rated AAA by Moody's and the S&P Global rating system. So that just goes to show that Moody's and S&P, if they rate them correctly, which again, that's up for debate, but they're saying the quality of those loans is really good. So they're packaging them up and securitizing them, bringing in a lot of capital to relend. So really good news for Lendingvest. It means the company is doing some good things, and I'm happy to have some money in there. Not too much. I never really invested a whole lot into Lendingvest because I didn't strictly consider them peer-to-peer. But you can see by that they are doing some good things in the finance business when it comes to their mortgages. Bondora sees an 8.2% drop in cash recovered in May. Obviously, the biggest problem with peer-to-peer lending companies that they have is recoveries of debt, bad debt, and they're seeing that recovery and cash dropping. I think you're just going to continue to see that through the COVID issues. The platform recovered 70,729 missed loan payments in May, which is up by 1.1% in April. This is the problem that I had with Bondora when I first invested through them 5 years ago or 4 years ago. I just saw a lot of defaults in my portfolio, and that just put me off, and I never really continued to invest through with them. I think that recovering non-asset collateral debt, so that's something, say, that's not secured by anything, usually credit debt, is very difficult. And I think in Europe it's probably worse than in the UK and some of those Eastern European countries. But again, you are being paid a much higher interest rate through a company like Bondora to take that risk. So don't be surprised to see if you have a lot of defaults in your portfolio if you're a Bondora investor. Let's have a look what else. So we got the Lendi administration news. Yeah, so there's been some reductions too in those fees through that administration. Like some of the staff members have been reduced what they make. This, for example, from £575 per hour reduced to an average daily rate of £1,232 for the day for that staff member. I think it's a little bit too late of a concession at this point, and it just really goes to show how these administration fees really suck out a lot out of these recoveries through these firms that have gone into administration. Let's have a quick look at the portfolio for the Trading 212. Now, we started out, again, if you haven't seen this before, this is a project that I figured I would try stock picking. £5,500 went into this portfolio to start in late September of 2020, and right now we've just made some good picks. We're up to £16,070. Again, I'll be giving away a portion of the gains on this portfolio to a charitable cause. Let's see what's going on in the actual portfolio. Let me zoom in just a tad here so you can see. Heavy into this Bonanza Creek energy. As I've said, I've been really going hard into the oil sector. I can see crude here now coming up to approaching $75 a barrel. I think you're going to see that possibly hit close to 100 by the end of the year, which means energy and oil stocks should really perform well. And I think the tech side of things is going to be a rough road. So that's why with the portfolio we just exited way out of the tech at the beginning. We made good on things like Tesla. Magnite was huge in the portfolio, which was exited out, and that ended up crashing down. I think it lost about 50%, or no, I think lost about 50% of its value. Tesla obviously dropping from the $900 range down to the mid 500s. And so happened to just completely luck out on timing on those tech stocks. But now Bonanza Creek is up about 14%. We got this Centrus, which hasn't really been doing much. It's a US company, but just kind of hovering around that negative 2.38%. But we've seen it was up to about $28 at one point up here, and just kind of seems to peter sideways today. You can see really just a little bit of movement here, but not those really big gains that we've seen in, for instance, Laredo has been huge. 207% gain on this Laredo Petroleum, which incidentally is a very small company. It only has 257 employees, but really high revenue grossing company. And as with these oil increases that we've seen, Laredo has done well. How much more upside there is on this share, I don't really know. You can see the chart here. We've just had this massive uptick from, it was down in the $6 range. I think we got in at about $27 down here. But funnily enough, this share, and it doesn't show it in this chart itself. Let me pull up Laredo oil stock price so you can see this. But this is absolutely crazy to me that at one point this stock was over $660. So I mean, you can see that this, for stock to go from $660 all the way down to I think it was down to $6 at one point. A massive correction when oil crashed. But yeah, if you happen to get in down here in this low point, you've made some huge gains on a company like Laredo. So I don't know how long. We'll probably just end up staying in that share until quarter 4 of 2021. See what happens. We made some big gains. there'd be absolutely nothing wrong with taking some profit out here at this point, but I'm sort of rolling the dice on this Laredo Petroleum. Lloyds Bank still up 86%. Again, we liquidated here a good part of this position when the share hit close to 45p with a 50p price target. Microvision is still stinking it up, minus 19%. Exited half of that position at a loss. All in, very small position, not really doing anything. And then this tiny little Tullow oil is up about 16%. Again, very heavy into these three energy stocks here: Laredo, Bonanza Creek, and Tullow Oil. And this is, if you want to try to knock it out of the park, as we say in the US, and you want to try to go for some big gains, you concentrate heavily into a sector that you think is really going to do well. And the chances are you could absolutely get it wrong. I mean, if I'd have put way more money in Centrus than I had in this Laredo stock, I would be missing out on these huge gains. Again, a lot of luck involved. I've completely gotten it wrong. And if I'd have gone heavy into Microvision, I'd have been down 19%. Again, this is the problem with picking out individual stocks. Really trying to go for those high gains. Chances are you might plop it into the wrong share, like this Microvision, going into Tesla at the wrong time, going into one of those tech stocks, and then the stock really falling. And this is a reason why I have such a concentration in index trackers, because I don't want that volatility that is going to come with picking out shares like this. Having said that, you can really make some great gains if you can figure out which of these shares that you're targeting is going to be the one that is going to be the golden egg for you. We just don't know that. But so, yeah, we're up about, 10,000 at this point on this portfolio. A little bit over, like 1,600 pounds. So going to have to pay tax on it when it gets taken out. But really good result on picking it out. Absolutely not normal right now what's going on in the stock market. So I would imagine if I'd have started this when the markets were declining, I would be heavily in the red at this point, and probably lagging behind the index trackers, which have done actually really well this year. But compared to this kind of result, you're just not going to get a tripling of your portfolio in a index tracker, because it's not designed to do that. So yes, very, very happy about that. So this is the article that was posted on the Facebook group. We zoom in a little bit here. 10 million Brits have less than 100 pounds in savings. That's really, really, really sad. If this information is accurate. 1 in 5 adults in the UK have less than 100 pounds stashed away for a rainy day. This is from the Yorkshire Building Society, so one would presume this is accurate information. More than a quarter say they have less than 500 pounds squirreled away. Now, one of the things that I would say about this type of article is it doesn't really dive into the reasons why people have so few savings. A lot of people are just really bad with managing money. They go out to eat all the time. They don't really watch what they're spending money on. They don't do a monthly budget. They spend money on clothes. And if they had this financial education to teach them, exactly how to budget and see where you're really leaking money, then maybe this news story would be completely different. But I would imagine there's a lot of young people too, maybe in their 20s, who just don't have a lot of money saved. And sometimes it's because they just don't know what to do with the money. So if the money's sitting in the bank account, they just end up spending it and then realize they don't have much to fall back on. And they don't know how to invest it. So maybe they kind of lose hope, and psychologically, emotionally, just don't have the will to really want to save or want to invest because they don't understand it. So really, really sad. There's a great calculator that I found here. It's on buyupside.com. And we're going to talk about the idea of investing, calling pound cost averaging. This is the idea of investing a little bit into a stock over a period of time and not doing what I'm doing on the Trading 212 portfolio, which is trying to time the market, which is extremely difficult. But I wanted to sort of highlight a couple of major UK stocks that I know when my dad had a managed portfolio through Charles Stanley, these were the types of stocks that Charles Stanley had him invested in. And they're really staples of that old school idea of investing in UK companies. So this is a really great tool here that anybody can use, and it will kind of give you an idea as if you invest over long periods of time, what you could expect to have returned. So it is in US dollars, but again, it doesn't really matter. You could consider it pounds, but we're going to, I'll show you how this calculator works. It's a little bit off screen here, I know, but maybe I can zoom out just a tad. That doesn't make it better. So if we put in, say, BP, and we invested 1,000, just say it's £1,000, and we put in £100 a month into BP, and let's say we started it in 2007, right before the market crashed, and we did that every month. This is a great calculator because it is adjusted for any stock splits and dividends that were received through this share. And again, it's buyupside.com, buyupside.com, and it does have a lot of the UK shares in here. But you can see the amount invested, if you put it in 2007, you would have 16,800 US dollars, but the total value here would only be 18,124 US dollars. So investing into BP wouldn't have really done you that good. Now, you can see some of the different shares that I put in here compared to BP. So we have, this is Amazon, which again has been a really big, actually I know that is not Amazon. Let me pull it. Here we go. Amazon. If you'd have done the same thing, 1,000 US dollars into Amazon, you just invested $100 every month, you'd be at 313,007 US dollars. This is why the averaging in is a really good idea for almost everybody, because we can't time markets, and if we ended up putting it in at the wrong time, emotionally, if you see a stock really start to dive and you plunk a bunch of money into a stock at one point, you have that emotional want to exit out of it and sell. I know because I felt it with this trading 212 portfolio. I exited out of microvision at a loss. If I'd have cost averaged into microvision over a long period of time, these numbers would look very much different. But my emotional side wants to exit out of here when I see this red number of minus 19%. And I want to put the money into Laredo, which is up 206%. And emotionally, that could be bad market timing. I'm probably hurting myself by doing things like that. But averaging in to some of these companies, you're going to see some really amazing gains if you can just buy and hold and not sell, because the only time you lose money in shares is when you sell. Now, this is another company that my dad was invested in while he was still alive, Rolls-Royce. Another company, but Charles Stanley was very, very high on at the time. And you can see if I'd have done the same thing, 2007 to 2021, I'd have put £8,200 in, and I'd have £2,099 right now. So again, you have to be very, very careful picking out individual stocks, because anything could happen. Nobody thought that Rolls-Royce would be a company that the stock price would fall so badly, and it really has. Let's see what else we got here. This is Prudential, another UK staple company. You'd be 16,000 is the total amount you'd invested, 16,800. You'd have 36,017 at the end of your 14-year investment period. So decent return. I mean, you doubled your money, but that's also over 14 years. Not actually really great return. Again, Vodafone, another really not a great performer, 16,800 in, $21,935 out. Not great, stellar returns. And then NG, which is National Grid, 16,800 in, 31,352 US dollars out. Now, if you'd have done it on the SPY, this is the S&P 500, owns the entire S&P 500. With that 16,800 in 2007, you'd be at 53,448 pounds, which is why I'm always saying that I believe the US market is a better place to put money in the UK. Now, I've seen some stories recently saying, Now people are focused on the UK market now because of some of the upside potential. I still don't see it. I don't. I think that the UK FTSE over the long, very historical time is going to underperform the US, possibly even Asia. And you can see the SPY here is very much proving that. And that's over a 14-year period. Again, 16,000 up to 53,000. So much, much bigger gains in some of those US stocks versus the UK ones that have been really staples of managed funds that people have been put into by financial advisors over the year. Again, BP, I mean, look at that. BP was the stock that was so touted a long time ago, and you'd be up only, not even 2,000 on that. So just something to pay attention to if you are under management right now with a stock portfolio and you're wondering what to do with your investments. Be very, very wary of that. Let's look at the cryptocurrency markets right now. We're at a $1.3 trillion market cap as we see absolute continued volatility over the last 7 days, down minus 13% in Ethereum, minus 7.8% in Bitcoin. You see a lot of news here coming out about China, which, by the way, I think is a good thing. I think this Chinese crackdown on cryptocurrency miners is a good thing. The less power that we have in China, good. I mean, the less power that the Chinese have over anything financial as they try to separate themselves away from the US dollar, I think is a good thing. And it will get picked up by other miners in other countries. So we can see here, we were at on Tuesday down to 29,000, which was a really good buying endpoint, I think. Again, you can dollar cost average into cryptocurrency. I recommend, for me personally, buying and holding Bitcoin very, very long term, I think is a good thing. And you saw a bit of a spike here, and I think we're just going to keep continuing to trade sideways here. As you've seen, we've had this big drop off. I think we're going to be in this region of 35 to 29,000 US dollars over the next maybe month or two. And I personally think it's a great thing as long as the cryptocurrency continues to stay repressed. It's a great opportunity for people that haven't gotten in to be able to accumulate those low prices. And I'm, personally, I'd love to see it stay low for another year, so I can accumulate some more Bitcoin, try to hold as much of that as possible as I have the income to do so, because over the long run I still think that you're going to see six-figure Bitcoin prices, but right now we are going to see some volatility because a lot of this news coming out is not particularly good. What's else in the crypto news? I don't know if you've seen this. This is a bad one. Hopefully I can show you this article. South African brothers disappeared with $3.6 billion in Bitcoin. They just took off with everybody's money. This is one problem when you're dealing with exchanges that you don't really know what they're about. You don't know the people behind them. They just basically took everybody's money and ran, saying the exchange had been hacked. Now, what really was funny about this article is these two brothers that own this crypto platform were 20 years old and 17 years old. Now, obviously, they're probably going to end up caught at some point or in the ground because they stole people's money, and people don't like that. There's a lot of people that I'm sure are very upset about this. But, giving your money to a platform where the owners are 20 and 17 years old just blows my mind how they were able to attract that much cash. Did people not do their research on this company and these people running it? That's just insane to me. Another reason it's good to consider having a cold storage wallet like a Ledger or a Nano wallet, a Ledger, a Nano X, or an S, where you can take your cryptocurrency if you own it and put it on your own wallet, put it in a safety deposit box, maybe at a bank, maybe just hide it somewhere in a fireproof safe. But if you do have money on a crypto platform, just be aware that something like this can happen. Do I think it's going to happen to a company like Binance or Coinbase? No, I don't. But so this 20-year-old and this 17-year-old are running around now with billions of dollars of Bitcoin that they stole from people. Again, this could happen in any type of finance world. It's happened before in the stock trading world. It's just unfortunate that it's happened now in South Africa, and a lot of people are going to get hurt by that. This is good news. So Peter Thiel backed exchange is called Bullish, is in talks to go public. So we've seen this company Bullish that will be launched. It's going to be a very, very big cryptocurrency exchange backed by Peter Thiel, who is a billionaire investor in the US. And this exchange is backed by 100 million US dollars, 164,000 Bitcoins, and 20 million EOS, along with an additional $300 million from a strategic investment round. I think that there's a lot of room for a good, secure cryptocurrency exchange backed by very knowledgeable people to come in and really take over. And we see some of the downfalls of Coinbase, Binance. I mean, if you buy cryptocurrency through Binance, you're going to see sometimes there's really small annoying things that they don't have on Binance. Like, it doesn't show you what your returns are as a percentage. It doesn't show you how old your returns are. So you've been investing and you've made X percent per year. It doesn't show you that. It doesn't show you how much you're up and down in a percentage on your coins. I think that's by design. Coinbase, it's pretty good, but again, it has some downfalls. The customer service sucks. A lot of people have had their accounts just stuck in limbo, and they don't tend to answer their customer service. So a good, solid cryptocurrency exchange like this to come in and do a good job, like a stock trading platform as far as the customer service side of things, and to be well financially backed, which Peter Thiel and the other investors really are. It's going to be capitalized with over 10 billion US dollars in cash and digital assets. I mean, that's a big amount of money for liquidity, which is I think what the market needs right now. So I'll be excited to see when that happens. So what else? New York City mayor frontrunner is pledging to turn the city into a Bitcoin hub. So we've seen both Andrew Yang and now Eric Adams both saying that New York City is going to be a hub for cybersecurity and also Bitcoin. You can see Andrew Yang had a tweet here. And why is this significant? Well, obviously New York City being such a major city of the world, bringing attention to Bitcoin is just going to help it. And so they're obviously very bullish on Bitcoin, and both Andrew Yang and Adams, who are both mayor candidates. So they've been publicly coming out and saying that they will transform New York City into a Bitcoin hub. So very, very, very interesting. I think that is really about it for the news. Hopefully, let's see here. Let's pull up the chat, see if you guys have anything interesting, any interesting comments. If you have questions or comments, bang them down in the chat. I will go through them real quick. Are we going to make it under? We may make it under 53 minutes, an hour today. Please hit that thumbs up again. If you haven't joined the Facebook group, bam, join the Facebook group. And let me just say also a quick shout out to our sponsor company who is sponsoring the stream today, Kuflink. If you haven't signed up for Kuflink, please do so. You can get up to £4,000 cashback on your first investments as a new customer. Terms and conditions apply. Your capital is at risk. There is a link, join.kuflink.com. And you can also go to the cashback page on the Financial Thing website. Get yourself some cashback right there. Thanks again to Narendra at Kuflink for being such a great supporter of Financial Thing in the channel. And I appreciate that very much. Let's see who else is on the stream. Yeah, and by the way, Kuflink has had a ton of new loans this week. I've been seeing the platform bang, 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 bang. A lot of new loans. So if you're worried about not being able to have your money investment deployed, Kuflink has really been stepping up their loan introduction. They have some pretty good quality loans on there. One thing I want to mention about that, when you go on the Kuflink platform and you invest, there's a little tab up there that says, oh, you can get paid at the end of the term, or you can get paid monthly. So it defaults to setting to being paid at the end of the loan term, which personally I don't do. I don't like that. I think getting paid monthly reduces your risk. If you're getting some of your capital and interest back each month, that's reducing the amount of money that you have tied up into that loan. I personally recommend taking the money out monthly versus at the end, because the amount of interest you get taking it out at the end of loan term is only a little bit more. It's not like you're getting 1% more for the privilege. You're getting about 0.3 or 4% more. So I opt for the taking it out monthly. But yeah, even Brian said here, Kuflink have had about 7 new loans this week, a few with lower risk A ratings. So those are good quality loans that they put in a lower A risk. Evening, Robert from Greece. Hey, George in Bridlington. Darren is here in Cambridge. And Craig, Graham, and Kilmarnock, welcome. Collateral weren't misusing their permissions, Mike said. They didn't have any. Yeah, it was reported though that they were using permissions that they didn't have. I agree. Craig, any updated thoughts on Unbolted? 39 emails today from them notifying of assets being put up for auction. I mean, I've seen these emails as long as I've been using Unbolted, and I haven't really looked today at the specifics of those loans. It could have been one batch of jewelry from one person. I don't know what they are, but no, I'm really not concerned about that. It's just sort of par for the course that you do get some defaults within Unbolted. But again, diversify. Don't have too much money in any one platform. I really need you to understand that any company can go under, and there is risk involved. So don't put too much of a percentage of your entire portfolio into one peer-to-peer company unless you really just have that heartfelt belief that they are immune to having anything happen to them, and that to me doesn't exist. So I'm not concerned about it, but if there is anything that I see as a concern, I will definitely bring it up on the stream next time. Robert said, I got paid back a loan fully from PropLend today after a delay that included a penalty interest equaled almost a 15% return over the term. That's really good news. Hi, Dan Barber in Hayfield. Let's see. Hi, Arthur Atchison. Nice to see you. Hope I didn't butcher your name. Thanks for joining us tonight. Yeah, a lot of comments about Blend Network just not having enough loans and too much investor demand. I mean, that to me is an indication of, hopefully with them, just my opinion, that they are offering quality loans that people want. So it is going to be difficult to get money in there sometimes. Yeah, some people do also, when it comes to shares, there's always this argument about dividend shares and growth shares. It really is what you prefer. I personally like to shoot for the moon with the growth. Dividend can be somewhat of a safer play in some situations, not always. There's a company called Kinder Morgan. The share is KMI that I use as a dividend play, but I tend to really use more of the growth side of things. That just, again, I don't think there's anything wrong about having a nice portfolio of dividend stocks as long as it's diversified and you're not just trying to pick out one or two and banging all of your money into those ones. Yeah, Paul says, pity Kuflink doesn't default to monthly payments. I know, I found that quite annoying because there's been a couple of times where I've been in a hurry and I just clicked invest and it ended up putting me into the loan that paid out at the end instead of monthly. And I thought I was going to say something to Narinder about it, but you know, if you take a couple of minutes or seconds just to make sure you have the pay on monthly and not at the end, you'll be okay. Yeah, I think Unbolted has been good. I don't know. I haven't personally lost any money, Dave, on Unbolted yet. Yeah, and two, I had an email this week too that I thought was worth mentioning about Bitcoin, and you know, there's always this continued talk about the electricity and why Bitcoin is just so harmful to our environment. We see this narrative from China saying, "Oh, we're going to ban Bitcoin miners because we're afraid of the economic impact." When realistically, the you know, economic and environmental impact of mining has been relatively small if you compare it to just the grand scheme of you know, environmental impacts of things like gold mining, oil production, banking, battery usage from electricity. And I just think that it's really important to do research on try to find the correct information when it comes to this, because there's a lot of false news about how much electricity is actually being used for Bitcoin, and why Bitcoin really exists, and why it's something to pay attention to. And it's not for everybody, you know. There was one comment on the Financial Thing Facebook group this week that said, yeah, it just seems like it's a place to promote Bitcoin. And, you know, I said that I put this in a comment. Really makes no difference to me whether you own Bitcoin or not. It doesn't change my life. I mean, what I'm here to do is to present you with information, because at the end of the day, I want us all to economically win with our investments. That was why I began this whole journey. And peer-to-peer lending, for instance, has been a really up and down ride for me personally. And the information that I put on the blog wasn't available when I first started peer-to-peer lending. And you know, if I'd have had more information and had done more research, then I'm sure I wouldn't have put so much money into places that have been bad investments. So again, you know, I just present this information for you to do what you want with it. And because I generally have a heart that I want everybody to do well with their investments, that I want you to win. And if I see something that is a potential way to change your wealth, then I'm going to present that information, and I put my money where my mouth is. You know, I have invested money into Bitcoin, and I have invested money into peer-to-peer lending, and you've seen my trading 212 portfolio. So I just want to present that information for you to do with as what you will. And you should definitely not copy me. You should make your own decisions, because you should, in any type of investment, if you don't understand what you're investing in, you shouldn't be investing in it, you know. Because there's a lot of people out there that are victims who invest money and then, you know, point the finger at somebody else. And, oh, they told me to do this, or this was wrong. Yeah, but the fact of the matter is that whenever an investment has gone under or has done poorly, I've never blamed anybody else but myself, because it falls on my shoulders to do the due diligence and to do the research and really understand what I'm investing in, and understand that there is a chance that an investment can go to zero. I've said this before. There's been one stock in my life that I've invested in that actually went to flat zero. A gold mining company about 15 years ago. And I understood the risk. I didn't blame the person that told me about the stock, and you know, I invested in it without doing very much research because I trusted what that person said. That person's still a friend of mine. But that's part of the risk of investing, and I take that on my shoulders. So I think that's what we all have to do. We have a responsibility to do our own research and our own due diligence. Paul says you can email Kuflink and ask them to change to yearly interest payments, which they are happy to do. I've had them, Dave says, I've had them manually swap them for me. Okay, cool. I like that. You can switch from monthly to final payment once up and running, but not the other way around. See, that's the way I want it to go. I want to be able to switch the other way. Debbie said, we struggle to keep emotion out of our choices and buy and sell at the wrong times. Need to follow someone more level-headed. Yeah, I mean, here's the thing is, if you're a long-term investor, you want to be putting your money into companies that you believe in very long-term. Of course, if you see things change about that company, then it's good to make changes. But if you are just selling your shares or investments because you start to see it dip into the red, you don't want to do that. Because the only time you lose money is when you sell. A lot of people are getting absolutely smashed right now in cryptocurrency because they bought in when Bitcoin was 50, 60,000 US. Now they've seen it go down to 34, 29,000. They can't handle those emotional swings. Whereas longer term investors, we've seen this with Bitcoin. We've seen it go from 20,000 down to 3,000. We've seen it pop right back up from 3 to 64,000. I mean, when Bitcoin was 3 grand, there was very, very few people that thought that this thing was going to go to 60,000. I mean, there was just this narrative of Bitcoin is finished. It's never going to go back over 10 grand, and it did. So you just want to kind of stay the course if you are invested in something, and there's no real fundamental reasons to be exiting that stock or share or cryptocurrency because the fundamentals haven't changed. Then the worst thing you can do is sell because you're scared, because you're gonna get wrecked. You're gonna get hammered. And be careful what you read too. I mean, there's so much advice over stock picking out there on the internet. You just really got to be careful about knowing what the correct source of information, because you can see conflicting news stories. One story saying, "Oh, Tesla is going to go over $1,000 in 3 months," and then you can see another story saying Tesla is going to go down to 300. It's just very, very hard to know what to do. So that's why you want to be diversified. Robert said, "How low will Bitcoin go this time?" There's a lot of talk about 24,000 US being this bottom point that Bitcoin could really dip down to, but I don't know. I don't have a crystal ball. I'd be happy to see it go down to 3 grand, pile in more, and yeah, it would be tough. It would be tough if you were to see Bitcoin drop that much to have the strength and courage to go in at those low levels, because that's when you make money, when there's blood on the streets. When things are falling, if you have that courage and that heart to be able to go in something you believe in, when the sky is falling, that is how you're going to make good investments. But I wouldn't be surprised to see Bitcoin drop down to 24 or 25,000. But I also wouldn't be surprised to see it start to take off back towards the $100,000 range. So I have no idea. What was the gold mining company called? Minmet, Lawrence. I lost a lot of cash with them. It was called Norseman Gold. I think it was an Australian company. What about the 18-year property cycle? It should be crashing in a couple of years. I mean, yeah, I don't know. Cycles are a funny thing, Gail, because if you look at the stock market cycle, so to speak, it's supposed to be every 10 years, right? So we had the 2008 crash. So technically it should have been the cycle around 2017, 2018. The only reason we saw the market crash because of COVID. It wasn't anything necessarily fundamental about the economics of the stock market. COVID doesn't hit, the stock market probably would still be on this massive bull run. So cycle is a good way to look at past history and prediction, but they don't always necessarily ring true. So I don't know about the property market. I think once the COVID thing really starts to settle down, you may see a property continue to really boom. It's happened in the US. Seems like a big bubble right now in the US, but honestly, it's down to building supplies being limited, lack of housing. And so there's this absolute boom happening right now. Mike Powell, anything happening on Monday? Yes, there's going to be two things on Monday. The sun will rise and the sun will set, and it might rain. Robert, I need a refresher of how to use Coinbase Pro. Go to the Financial Thing YouTube channel. There is a video on how to use it on there. Yeah, Coinbase Pro is a little bit confusing, but once you do it once and kind of ignore all the crazy graphs and stuff, it's pretty easy. But there's a tutorial on the channel. Well, it went way over an hour, so we're going to wrap it up. Thank you to everybody for joining. Again, please hit that thumbs up if you haven't, and subscribe to the channel. Thanks again to Kuflink for sponsoring. Thanks to everybody for being here. All being well, back here next Thursday evening at 7:30 p.m. UK time. If you have any questions, comments, put them in the chat. And I will see you next time. Have a great week. Thank you again. Love to everybody. Take care and have a great weekend.